What up, what up, what up, what up, what up, Crypto Warriors, it's Sergeant Crypto, back at it again. Today is Sunday, May 3rd, 2020. Money is plentiful for those who understand the simple laws which govern its acquisition. George S. Clason, the author of The Richest Man in Babylon. A must read if you are into saving money and want to understand money. Also a must read, The Creature from Jekyll Island by G. Edward Griffin. This one is a little bit longer and in some cases a little bit dry. However, you have to read it. If you are in the Bitcoin space, must reads. Satoshi's White Paper, The Richest Man in Babylon, Rich Dad Poor Dad, Bitcoin in Black America, and The Creature from Jekyll Island. Must reads, must reads, must reads. All right. And also, my ebook, which is available in the description below, of course. Today, I'll be going over Warren Buffett's annual meeting for Berkshire Hathaway and a Twitter video. I'll be playing that real quick. And also an article from Forbes about a new bank. Let's get into it. So coming out of Yahoo Finance, Mr. Warren Buffett had his annual meeting for shareholders. Typically, this annual meeting is only for shareholders and it's broadcast afterwards. I don't think they live feed it. Well, I think they do. But anyway, it was broadcast live on the internet, interwebs, yesterday. And typically, like I said, this meeting is held in Omaha where up to 10,000 people go for this annual meeting. And of course, because of social distancing and what's been happening right now, he had to do it via a live stream. And he's in this article, it says Warren Buffett says that American economic miracle has always prevailed and it will do so again. What is he talking about here? He's talking about the fact that of bailouts, right? We saw that in 2008. The person to benefit the most from the bailout, or one of the people that benefits the most from bailing out banks and large institutions, is Mr. Warren Buffett himself. And he's all for bailouts because, as we saw in the last economic crisis of 08-09, when the banks needed a bailout, he was all for it because he had financial interests in these banks. You know, he's one of the if not the largest shareholder for Wells Fargo. I've said it on this channel before that Wells Fargo is a corrupt bank, and they opened millions of accounts illegally and no one went to jail. But that's not why I'm here. I'm not here to bash them right now. But what we're seeing is him saying that the American miracle, when he's speaking about the American miracle, he's talking about the Federal Reserve and the fact that they can print unlimited cash, bail out these large institutions and these large companies with a lot of currency. They have an unlimited amount of currency they could print to save these companies, and the ones that are closest to the printer are the ones that benefit the most. And we're seeing that again. And this is what he means by we're able to get out of the situation because of the American miracle. And that's how I understood it. I mean, again, as always, I always link everything in the description below, and you can come here and read it yourself and see what you think. One of the major things about Warren Buffett is he's a strong believer in the United States of America, and I am as well. And I definitely believe that we will come out of this situation, and we will, come out of the situation. What doesn't kill you make you stronger, right? So we'll come out of it, and we will be fine, and we'll be better off than before. However, the thing is, we have a Federal Reserve, which is a private bank, which will print unlimited amount of currency, and the people that's going to be on the hook for that printed currency are the taxpayers. You, me, our children, and our grandchildren, maybe even our great-grandchildren, because they'll be taxing the hell out of us and them to pay back this currency with interest. Take it with a grain of salt, right? Next, talking about more central banks and their unlimited money printed, and also I said money. their unlimited currency printing, and also their negative interest rates. Now I'm going to play this video here. I have it queued up to the point where I wanted it, and here it is.
Well, let me put it this way. There are some disruptive effects of going negative. It's hard to explain to depositors why their deposits are shrinking in their account when they're not taking any money out. And when you've already got a disrupted financial system, you might want to be hesitant about introducing a new source of disruption. So when you look at the current situation, yes, I'm quite comfortable with the effective lower bound where it is.
Thank you.
So there you have it. He's coming from, this is Canada, by the way, I'm sorry. And this person represents the incoming Bank of Canada governor, basically the Fed for Canada. I almost said Canada, but for the Fed for Canada. And he's talking about going negative as far as interest rates are concerned, and not wanting to introduce a negative interest rate currently because there's such a shock to the system right now with what's currently happening. And if you introduce that right now, it'll basically be upheaval. It'll basically be riots in the street because people won't put up with it. And we see that they already have this idea set to implement it. If not now, they'll definitely implement it later. So why not exit the system? Why would you continue to be a part of a system that doesn't give a crap about you and takes advantage of you at every chance they get? So they're going to introduce negative interest rates where they'll be able to subtract money directly from your bank account. So as soon as you get paid, and this is why the system is already set up the way it is. And I know it's hard to exit the system because when we all get paid, everything is getting deposited directly into your bank account, right into your checkings account, in your checking account, not checkings, into your checking account. And these banksters will have access to that via negative interest rates. So as soon as it gets deposited, they'll be able to subtract that money right out of it. So why still be a part of the system? Take your money, well, not financial advice, but what I do is I take my money out right away. I don't leave it in there, and I put it directly into Bitcoin. So leave the system. Don't be a part of the system that doesn't care about you. They shit on you left and right and expect you to eat said shit and be happy about it. No more. Exit the system, man. So they're coming up with their negative interest rates, and they're our neighbors to the north. This is not some foreign country in some faraway land that you may have never heard of. This is Canada we're talking about. We already see that interest rates right now in the United States is at 0%. The only place left for them to go is negative. They're going to go negative, and they're going to start deducting that money directly out of your bank account. So before, when they had a bailout back in 2008, 2009, now they're having something called a bail-in, where they'll have that negative interest rate and take that money directly out of your account. All right? It's coming. Point blank, period. Next. Why a new breed of banks are renouncing FDIC insurance. So reading that book, the creature from Jekyll Island will explain exactly how the FDIC works and how the Federal Reserve works, and that they're a private bank and things of that nature. The FDIC insurance isn't insurance that's covered by the federal government. It's basically us paying ourselves. It's our own money. It's our own tax money that's covering the insurance. So when the other day, I should have had that queued up, but the other day when the chairman or the chairperson, because it's a lady, when the chairwoman for the FDIC came out and went on the news and said, oh, don't worry about your bank, your money in the banks. Don't go take it. Don't withdraw your money from the banks because it's safe. It's insured up to $250,000. Don't do it. That was a sign to do it because they were afraid of a bank run. Right before this crisis happened, in early March or late February, there was a bank in Midtown Manhattan that literally ran out of money. People were going there withdrawing all their money, all their funds, and they ran out of cash. These people were afraid of a bank run. And if a bank run had happened, then it would have cracked the system. So that's was code for get your money out the bank because they were worried about it. And again, that FDIC, that insurance is something that we're the ones paying for it. So it's not insurance, so you're getting money from the government. Congratulations. You paid yourself. You're not getting it from the government. That money isn't just coming out of thin air. We are the ones paying for it. And again, I suggest that you read this book. It's a very long book, but it's worth to read. And if you got to read it more than once to understand it, so be it. So I have some highlighted stuff here. And this is just an interview from Forbes with Caitlin Long. And if you're not familiar with Caitlin Long, get familiar with her. If you're definitely in the Bitcoin space, you need to definitely get familiar with this individual. She's a 22-year Wall Street veteran, and now she is all in on Bitcoin. So this is directly from her. The law requires banks to be 100% reserved, or this particular bank. Right now, I need to have these things pulled up, but whatever. You could research, do your own research. Don't just take my word for gospel. So right now, the Federal Reserve, before they used to have to be up to 10% reserve. And right now they're at 0% reserve. Well, this new bank that she's the co-founder of, Avanti Financial Group, they have to be 100% reserve because they are not allowed to lend. They are not FDIC insured, but they will be the first banks in the United States that will be permitted to custody crypto assets. Great news. However, it won't be for the everyday person. It'll only be for institutions. And I have that highlighted down here. No, but it's only for institutions, not for your everyday individual, and your everyday customer could walk in off the street to be a part of this bank or to use their services. It'll be for your retirement funds and, family offices and things of that nature. Another thing I have highlighted down here, coming directly from Ms. Caitlin Long, in the banking system, every asset is someone's liability. But in the digital asset industry, those assets are what's called equity-based assets, not debt-based assets. In this kind of environment where balance sheets are going to start to matter again, I believe a lot of people will understand that and will value digital assets for that. We have to understand that we are in a debt-based society, and we've been in this debt-based society for a very long time now. I think I've highlighted that here. This is what I highlighted. Let me see. Avanti will only be servicing institutional investors, not the general public. So basically, Avanti will be servicing their pension funds, mutual funds, their university endowment funds, and family offices. Yeah, so there you have it. But this part right here, where it talks about in the regular banking system, every asset is someone's liability. All right, because it's a debt-based system. When you deposit your money in the bank, they're using that same money to lend it out to your neighbors. So people that have credit cards with that bank, that have mortgages, car loans, personal loans, and different things of that nature, that's what they're using that money for. It's and also charging them a very high interest rate and not giving you your proper share in the form of interest return to your savings. So there you have it. Everything is someone else's liability. Very important right there. And it says right here, this is a quote from her again, we have really been in a debt-based system in the United States for the last 50 years, some would argue even longer, the U.S. has been consuming more than it has been producing. We have been consuming more than we have been producing. We stopped being producers and start being more of a borrowers for a very, very long time. And we saw that since what, maybe the 70s, right? Maybe even the 60s. And that's a very long time to be in a debt-based system. And, people are saying that, oh, it was the coronavirus that caused everything. No, it was just the pin that popped the bubble. But let me know what you guys think. As always, leave a comment section in the comments below. Smash up the likes, hit that subscribe button, and that notification bell to get notified when I upload new videos. Thank you for watching. It's Sergeant Crypto, and I'm out. Peace.